Before we get started, by way of introduction, my name is Ahmed Ali Bob. I'm the Director of Social Impact at Block, formerly known as Square. We like to say that we took a familiar shape and added more dimensions. And so now we're a Block, we're 3D. And I'm so excited for you all to hear from our distinguished panelists here that are really subject matter experts from across the financial services sector. And we've got a really great conversation underway or that we're about to get into. And without any further ado, why don't we go ahead and get started? So I'll just ask for each of our panelists, as you all get the first question coming your way, if you could just quickly and briefly introduce yourselves, and then feel free to jump right into the question. And with that, we will start with scenario. And our first question is, what steps can financial institutions and fintech companies take to build trust in underserved communities that have historically been excluded or faced predatory practices?
So good afternoon, everyone. I'm Scenario Adabeshan. I serve as a Senior Managing Director of CRA Compliance and Exam Management at Truist. What is CRA? Community Reinvestment Act. All financial institutions have to make sure that we're serving our entire communities, low and moderate income families, small businesses, and to make sure that we're putting appropriate resources back in the community. Just a quick commercial, if you don't know who we are, Truist. We're a $530 billion bank, over 40,000 teammates, primarily located in the southeast and mid-Atlantic part of the country. We have just over 1,900 branches, and really our purpose is to inspire and build better lives and communities. And so in everything that we do, from the financial products that we offer to our community, that is really at the heart of it. So your question is, how can financial institutions work with fintech companies to better serve our communities? So, I like to think about Truist as this large entity with a lot of opportunities to serve our community. Again, focus on not just middle and upper income, but low and moderate income communities as well. I think it's very, very important that from a financial institution perspective, that we stay on top of the technology. Banking has changed. It's not the way it used to be back in the 60s or the 70s. Folks are banking using their telephones, and we have to make sure that we stay on top of the cutting edge technology so that we're serving our communities and meeting them where they are. From a fintech perspective, you think, hey, we're this large financial institution and we have all these IT people in the back of the room coming up with all of these solutions. That is the case in some situations, but we also rely on partnerships with fintech. I know in the seat that I serve in at Truist, I'm on the compliance, exam management side, making sure that we're putting enough resources in our communities from a mortgage lending perspective, small business, all of the things. But often we need those partnerships with fintech companies, right? Vendors approach us all the time with new solutions to serve our communities in a better way. So that's really important for us. And if you're in the audience and you have a fintech company, you know others that may have, make sure that you are reaching out to financial institutions, right? I would say probably in a week, we probably get approached with, at least me personally, get approached with at least 2 to 3 vendors in a week looking to offer solutions to Truist in terms of a partnership, ways that we can reach the community in a better way, whether it's a small business, whether it's an individual looking to purchase a home. So fintech companies are very important partnerships for us.
Absolutely. And Scenario, one thing that you said that resonated with me was the way that people do their banking is different now than how it used to be, where you used to have to go into a building. Now you can manage your money from an app. And I think that's a really important call out there in terms of how the landscape has shifted there and how we all need to adapt to be able to serve our customers. And so, Milan, I would love to kick it over to you to answer the same question. And just to refresh your memory here, and for the benefit of some of our late scragglers, what steps can financial institutions and fintech companies take to build trust in underserved communities in particular that have historically been excluded or faced predatory practices?
Yeah, thank you. So by way of introduction, my name is Milan Bhatt, Deputy Director of Economic Inclusion at Clinton Global Initiative, which is part of the overall Clinton Foundation umbrella. We are, as we like to say, connectors and conveners more than we are implementers or grantors or policy people. But one of the things that we really prioritize is multi-sector solutions and partnerships. And as our name suggests, we are very much global in all of our pursuits and in everything that we do. I will say, particularly with regards to rural populations, for those who don't know, this has been a legacy population and a legacy set of issues and solutions for President Clinton going back almost 30 or 40 years. I think for those who are less familiar with the data, one sort of statistic I would highlight is, $2 trillion worth of economic power, often untapped, that rural communities face. And one of the things that we have found to be most really useful and instructive as we think about place-based approaches is really to not make assumptions about what are the most critical needs facing rural communities, which tend to vary. Often it's transportation, it could be infrastructure, it could be digital education, digital literacy. And so, whether it's fintech, and I think later I'm going to give some examples, domestically and globally, but just as a baseline proposition, when we talk about excluded communities in this country, often we are talking about rural communities, women, immigrant communities, and the nature of those barriers. I mentioned some of those earlier, but when it comes to immigrant populations, which we know are, according to the Congressional Budget Office, expected to drive over $2 trillion worth of economic power. There are often language barriers, trust barriers when it comes to accessing financial institutions and services, certainly when it comes to accessing government. So I think some of the most effective partnerships that we've seen in terms of potential pathways to prosperity for rural populations, for women, for immigrants, have really been the ones that are tailored and give a direct voice to the communities and also to the community leaders. So maybe I'll say more on that in a little bit.
That sounds great. A little bit of foreshadowing there from Milan. Appreciate that. Brian, over to you. Would love to get you to introduce yourself and potentially answer this question here, which is, which partnerships or policy changes have shown the greatest impact on widening financial access, and how can those approaches be scaled so that we can reach even more people than ever?
Well, thank you for that. I'm Brian Betts. I'm the President and Chief Financial Officer at Operation Hope. First of all, I want to welcome you all to Hope Global Forums. We really appreciate you coming, and this is just an exciting opportunity for you to have an opportunity to have a diverse population to interact with, to learn from, and the networking, of course, is fantastic. So I had to give us a little plug to get the conversation started. So, from a policy and partnership perspective, what I was really thinking about before this panel is, 5 years ago, we saw a lot of investments and partnerships with the money center banks and the larger banks, with MDIs and with CDFIs. You've got to get to the communities that have the need, and you've got to work with partners that the communities trust. And so if you can partner and help those organizations, which many banks have poured in time, talent, and treasure, you're widening that access. And I really was very pleased with all of the progress we made during that time. And as my panelist also mentioned, CRA, from a policy perspective, I think that has been a game changer in making sure that the banks and the fintechs and the financial institutions are reinvesting back in their communities. We were joking earlier, it needs a little reform, a little updating, but what doesn't? But the core principles really are what's protecting, to make sure that the communities they serve, they're actually serving the entire community, not just their customers. One of the things I will caution us on is, when we talk about access, is let's not judge access just based on how many accounts we open. Let's judge it based on how many accounts you keep. Are their credit scores improving? And is their financial well-being improving? So when we're looking at access, let's make sure we're measuring ourselves correctly as well. And sometimes that takes a longer time to validate our impact. And I know we live in a society of, I want immediate gratification, I want immediate results, but that's not always the most indicative benefit you get, is just from accounts being opened.
That's a great call out, Brian. I really appreciate the focus on metrics, but the right metrics. I think that's really, really critical here. Back over to you, Scenario. How can we ensure that women, rural communities, and small businesses aren't left behind as financial services become increasingly digital?
Yeah, I'm going to continue to pick up on this physical branch location, especially when you think about rural communities. There are not a lot, they're like banking deserts in a lot of those areas. From a regulatory perspective, I keep bringing back Community Reinvestment Act. Regardless if you have a branch or don't have a branch, if it's part of your CRA assessment area, you still have an obligation to serve those areas. So if you don't have a branch, you still need to be present in those communities. And from a Truist perspective, the way we look at that is, again, the partnerships. What are the nonprofit organizations? What are the local municipal government operating in those communities to make sure that we're bringing the full bank to those areas? I think digital, that's a great opportunity to help reach a wider population of our community, but also making sure that we're not just showing up, we're showing up to meet the needs of those communities. The needs in one area may be totally different from the needs in the other area. And from a financial institution perspective, we don't just design products and say, okay, we're going to go to this rural community. What does the community need? And we should be designing based on what those community needs are. But you also need to couple the digital with the human touch. People still need coaching, development. Even though we see foot traffic in our branches, it may not be very much, but people want to know that there's a branch there when I need to go in person to have a conversation. So being very intentional and making sure that we have the right partnerships, making sure that we're putting our dollars, not just the grants that we give away, making sure that we're making equity investments, affordable housing. If you don't have basic housing, all these other things become very difficult. So a very intentional focus around affordable housing, making sure that we're reaching businesses, but not just the large ones, but the small businesses as well. So a sweet spot for us at Truist is to make sure that we're reaching businesses with gross annual revenues of $1 million or less. Those are the toughest businesses and often are overlooked. The other thing to keep in mind is from a financial institution perspective, we are regulated by the FDIC, the OCC, and Federal Reserve Bank, and our risk appetite sometimes ties our hand in terms of what we can do. But that's the reason why it's so important to have these partnerships. We can provide philanthropy to a local community development corporation or CDC or a minority depository institution or a local nonprofit. They have the ability to take on more risks. Although we may not be able to provide capital for an entrepreneur that wants to start a new business, we can provide philanthropy to a nonprofit organization to make a loan to that small business owner, but then also be in the loop so that when they're ready to graduate to a larger scale, they can come back to the financial institution.
Well, Scenario, I really appreciate the focus on digital with a human touch. I think that is so critical for lowering barriers for folks to be able to participate in the economy. Milan, would love to pose the same question to you, and just as a refresher, how can we ensure that women, rural communities, and small businesses aren't left behind as financial services become increasingly digital?
Yeah, no, thank you. And just to sort of build on some of my earlier perspectives, I wanted to focus a little bit on, rural populations, rural migrant populations. And so I gave the statistic earlier about immigrant communities. The last thing we're going to do here is politicize any of that, just talking about the data, talking about populations, talking about the barriers. And we know that in many states, immigrant communities are disproportionately residents of rural communities. And so just an example of, I think we all, it's been 5 years, we all remember the pandemic. And one of the programs, and our focus again is on partnerships. And so what does that mean for particular populations facing financial barriers? Well, we knew across the pandemic, which lasted much longer than anyone expected, just the exacerbation of various socioeconomic disparities facing communities of color, frankly, at large. and even within that, sort of having a profound effect regionally and demographically. And so one of the solutions, this is something that I was involved with back in my sort of government days. This is sort of, I would say in many ways, the cusp. We talk about AI, we haven't talked about it yet, but what does it look like for there to be responsible integration of AI around a common mission that brings together government agencies, community-based organizations, and tech partners such as Google to be able to stand up programs that are directly responsive to those immediate financial barriers. And at the time, those individuals, and again, disproportionately, oftentimes immigrant women, rural communities, that were excluded from some of those COVID lifelines, state and federal pandemic relief programs, they're the ones that this program targeted. And I'm mentioning in part because for us, it's as important to think ahead about replication and scaling programs. It's not just enough to see a success. So with this example, essentially it was a $2 billion fund called the Excluded Workers Fund. And we literally were able to get checks of $15,000 into the pockets of over 130,000 residents who were excluded for various reasons. And so I use it also as an example of one of the reasons why we felt it was successful, and by all accounts it was that we were directly funding, as government, we're directly funding community-based institutions that were reaching out to communities to encourage them to come forward, to apply, to understand it's okay to trust government, it's okay to trust other partners. And at the end of the day, I think those gains. And since then, and I haven't really been directly involved, but a lot of partner organizations have been working nationally in states like Colorado and others to make these types of financial relief programs a more permanent part of state unemployment insurance benefit systems and others.
Well, Milan, I got to say that's a great example of an effective program. Congratulations to you all on administering that. Next question is for you, Brian, coming your way. How can digital wallets, real-time payments, and AI-driven credit scaling responsibly increase access to affordable credit while maintaining fairness, transparency, and security?
Yeah, that's a really great question. And, there are a lot of benefits to the technology that has been available, in process, and going to be implemented. So we know it's going to lower expenses, it's going to lower cost, and that should flow through to the consumer. So that in itself could be a benefit. We also know there's less friction when you onboard a potential customer onto a digital app, a digital wallet, and other digital solutions. But when you get to the credit, AI is going to have so much opportunity. I'm really excited about it. But what you hit on is the ethical use of it. So let's take an example of you're in a community and there has historically been loans that were underwritten that contain discriminatory practices. If you're a company or an organization and you're taking your historical data, putting it into AI for it to learn and start replicating those tasks of underwriting, it would pick up the same discriminatory practices that have been historically out there. So you've got to be careful when you're using technology to make sure you're removing that bias, because otherwise you're going to replicate it and expand that discriminatory practices of AI. I am not here to say gloom and doom about AI. I think it's going to be transformational, but we do have to be aware of the bias that can be contained as you're loading that data in, as you're teaching that machine to learn. You've got to be careful that you sanitize that population and sanitize the historical practices that may have an unintended consequence.
That's a great perspective, Brian. Scenario, anything to add there?
Yeah, I would just add, I would love, the AI technology to be a resource for individuals that have invisible credit scores, right? Using the technology to attach to a consumer's checking account, for example, to be able to scan the payments, the transactions. I'm paying my cable bill every month. I'm paying this, I'm paying that. Using that in such a way for benefit, especially given that we have a significant number of unbanked and underbanked individuals and are still shut out of the financial industry. So I think leveraging technology for good to help more individuals enter the mainstream banking industry, I think is going to be important. So again, this is where fintech companies have opportunity to have great partnerships with financial institutions.
I have to jump in there because that is a fantastic point. I mean, historically, you're looking at credit scores to evaluate someone's credit worthiness. But if you look at someone's checking account, do cash flow analysis. Are you paying your cell phone bill on time? Are you paying your rent on time? Why can't that be just as valuable of credit worthiness as a traditional credit score? So I think there's a huge opportunity for our fintechs to leverage that opportunity to open up capital and credit to other individuals that may not already have some.
Well, I think that's a fantastic perspective, and I think it's one of the exciting things about some of the progress that's been made over recent years, which is you get to consider in a holistic way the financial health of consumers and customers. Moving on to our next question here, Milan, this one's for you. What role can employers play in ensuring long-term health across their workforces?
And thank you for that. So there are a few points I wanted to make here. One is to start, I'd be remiss if I didn't lift up the great work that Operation Hope and others have done, partnering with Delta through various pilot programs. And here at CGI, one of the things I talked about how much we stress partnerships, and the way that that often manifests is through our model, what we call commitments to action. And so a couple of years ago, in partnership with JP Chase and Commonwealth, we saw one of the more impactful commitments to action that we've seen in this space in a long time. And a lot of the impact was predicated around the critical role of employers. And in that case, focusing in 3 or 4 regions nationally, focusing on medium-sized employers that disproportionately employed LMI, low and moderate income populations. And the role of Commonwealth, and I'm mentioning them because I think the data is really important here. There's so much mythology and demagoguery out there impacting our communities. Boy, how great is it when the data perspectives are on point and can be compelling to even the standard bearers like JP Chase and others. And there was a really strong data. And for those who are not familiar with Commonwealth, feel free to look them up. I mean, they've been quite prolific. But really being able to make the business case around retention, around morale, around productivity, around reduction of errors, around long-term financial health, et cetera, et cetera. And this sort of reality and this business case really undergirded as a powerful business incentive for employers to be able to do such things as, so that there's the financial coaching and financial education. I think we've been hearing about that. But also, what does it look like to voluntarily go the next step and to provide robust savings programs and health programs? What does it look like in states that aren't legally required to provide paid family leave and paid sick leave and childcare? I mean, these are really critical. When we look at our economy and exclusions, there are 163 million people in the workforce. That's a record high. How many of them, how many tens of millions are without those benefits, without the savings, without, and we also know just from a behavioral and psychology perspective that there's a profound injurious effect for these tens of millions of workers, which again affects productivity and longevity, et cetera. So one is just those types of programs, the financial education, literacy, and beyond in terms of savings. And then just really briefly, if I may, just a couple of other realms, and this has been a growing trend. I think maybe many of you have been familiar or even supported through your institutions, is just the phenomenon of employee ownership across industries. And so I'm gonna throw out a stat, and then I'm gonna sort of opine as to why it doesn't necessarily provide all the reason for hope as we think. So the stat is there's 15 million employees over 6,000 employers nationally that are part of employee ownership models, ESOPs and others. I mean, there's different, we won't get into that here, but the reason I say it's impressive but also underwhelming is because that number has stagnated for 10 years. Philanthropies have gotten more interested. It's been more mainstreamized in terms of the discourse on economic inclusion, but we literally have not progressed in terms of just the playing field. So I wanted to sort of mention that, again, powerful business incentives, tax incentives, and funds that at least previous administrations have stood up to make it easier for employees to actually acquire some or all of the business, ownership of where they're employed over time. And so that is, again, just something that would be great to think more. How can we leverage more partnerships, more philanthropic support, blended capital, et cetera? How can we get employers excited about it? And then finally, and this is some of my bias is just former Department of Labor. I mean, wage security, right? We talk about financial security, but we have to talk about wages. That 163 million number again, right? There are paychecks every week or every 2 weeks, hopefully, and if they're not enough, it doesn't diminish the importance of greater financial education and all of these other types of programs. But what would it look like if we lived in a nation where the core take-home pay was closer to what, by all accounts, is really a baseline of adequacy in terms of being able to pay the bills. And I will just say a final part on that, just because I think this is, again, sorry for inundation on data, but if the minimum wage in this country merely kept up with inflation the last 45 years, our minimum wage federally would be 2-3 times or more what it is, which is, does anyone know the federal minimum wage? $7.25. It hasn't gone up since the Obama administration. So we're not here to talk about political reform, but it's just important to, when we talk about money and who has it and who doesn't have it, how can we not talk about wage security? And then also just on a data solution there, one would argue minimum wage is great as a baseline, but really shouldn't we be talking about living wages? And I'm happy to share more with others, but one of our partner organizations has been working intensively for a few years now to boil down to the municipal level based on cost of living, what the living wage should be municipality by municipality. So we're also thinking about creative ways to equip employers and others.
That's fantastic. Thank you, Milan, for sharing that. Brian, anything to add from the employer's perspective?
Yeah, I mean, I think employers do have the responsibility to take care of their employees holistically. You mentioned our partnership with Delta, and I will tell you what makes that so successful is the CEO was the one that bought in. He's like, I'm worried about the financial health and well-being of my employees. And we launched an effort 5 years ago called Financial Literacy for All. And the premise of that was to go secure 80% of the Fortune 500 companies to get their CEOs to not only commit, but to fund financial well-being in their business plans. Operation Hope can be a solution. We'd be more than happy to be a solution, but we're not the only solution. There are many different ways to take care of your employees' financial wellness. And so we're tackling that challenge by going to the employers, because that is the easiest way for us to get to the large numbers at scale. Our chairman, founder, and CEO, John Hope Bryant, often talks about, financial well-being is going to be a benefit in the future, just like healthcare was. You were talking about the statistics around, a lot of people at work spend 30 to 40% of their time worried about stressing about their money, how they're going to pay their bills. That's lost productivity. That's lost engagement. That's, morale, turnover. So there is this concept of a company can do well and do good at the same time by investing in their employees, but they also see a return on the productivity and the contribution of their employees.
Fantastic. Thank you so much, Brian. Well, this has been a really incredible conversation. I think we've been able to highlight some of the challenges facing folks looking to access financial services. I want to round us out with a last question that ends on an optimistic note. And would love to hear from each of our panelists. What are you most hopeful about when it comes to financial access in the future? Starting with you, Milan.
Sure. I've always believed in the power of strong coalitions. I think this is an environment right now, for obvious reasons, where we need to double down and strengthen those coalitions. I think conferences like these and the ones that we had in September and others give me a lot of hope because too often in this day and age, we are relegated to the realm of social media, and we exchange these data points and perspectives and maybe sort of reframe perspectives and then reframe those perspectives. But to me, the human impact, which stems from the toll and the fact that we could be doing a lot better, the vision that I think, leaders in all sectors, I'm generalizing, but I think there's a lot of untapped potential there in terms of movement building. And it's financial inclusion and economic security, but I think there are other issues that probably are resonate as well that ultimately go to livelihoods of communities. And so the knowledge that we all continue to share about the nature of those barriers, how profound they can be, and also just didn't really kind of address as pointedly here, but final part of what gives me hope is our ability, and this is specific to CGI, to be looking at some of the successful models and practices around the world that have the potential to achieve greater gains here, whether that's around, outcomes-based financing, around poverty reduction programs, and doing more to establish affordable housing as an asset class. These are just some examples. So I think just looking at the traction that has been gained in recent years, I'm just really hopeful about what's ahead for the movement.
Brian, would you like to go next?
Sure. I've got two answers to that question. One, I'm going to piggyback off what you said, is the partnerships. We partner with CGI, and I commend CGI for always having these actions and commitments that they solicit. We signed up 2 years ago to take financial wellness into HBCUs, provide more access to our young adults. Can't dismiss Truist as our largest partner. And we call them partners for a reason, and I know you can't put that in a contract because legal will be like, you can't be partners, but we do consider you a partner because what we do is help you serve your community, and what you do is listen to us when we come back and say, this is what the community needs. These are the challenges we're seeing. Can we create products and services that will meet those needs? So I'm really optimistic about partnerships from all of my panelists, and Block, you're a partner as well, investing in opportunities like this to spread education and knowledge. I'm also optimistic about the technology. I mean, let's just face it, AI is going to be a game changer. We've talked about the ethical use of it, but it's going to reduce cost, it's going to streamline, it's going to create less friction to onboard clients. You can strip out the discriminatory practices if you implement it correctly, and that could open up a lot more access. But I will say, you touched on a great point. When you're dealing with communities that have been either underserved or discriminated against in the past, it can't be 100% digital. There has to have access to a person. If I don't trust you day one, and you throw me in a digital loop and I can't talk to somebody, I'm not going to trust you. So you've got to respect, you've got to invest in that community, and you've got to do it consistently. So I think the technology is going to be a game changer. It's going to open up a lot more access. We just have to do it correctly, and I think we will. Thank you, Brian.
Scenario, take us home.
Yeah, I'm very hopeful for people. People, our communities, our businesses, letting their voices be heard, right? Financial institutions, whether it's nonprofits, we exist to serve our communities. And so it's very important to make sure that your voices are heard. If we're not showing up, Truist or any other financial institution or nonprofit, you got to make sure your voice is heard. There are people on the other side of the sign, right, listening to your feedback. One of the privileges that I have in my role at Truist is to review complaints that come in from our community, right? We want to make sure that we're serving the entire community. So if we're getting complaints from the community that there are barriers to access to financial resources, whether it's products, services, ATMs, branches, I get the privilege of reading those complaints and using it to inform policy decisions internally. So I'm hopeful that our community will continue to let their voices be heard. If it's not right, you gotta speak up. That's how change will happen. I'm also excited about partnerships. Partnerships are so important, and let's be honest, financial institutions haven't had the greatest reputation going back to history, right? There's mistrust in some communities, and being present, whether it's with a branch, whether it's showing up doing financial education, those type of things are important. And so one of the things I do want to highlight is that Truist, this whole conference is, the center of it all is around money, financial education, reaching our young folks at an early age. Truist Life, Money, and Choices. That's one thing that we rolled out the earlier part of this year, to go into schools with our own curriculum to teach these young folks about finances, right? The decisions that you make at a young age can have an impact into adulthood. Being out in the community, educating our small businesses, making sure that we're bringing the resources to our community. So I'm optimistic and hopeful about a lot of things, but those are a few that stand out for me.